Good evening, all. It's Sunday night. Shea Horowitz, ShogunTrading.com. This is our free weekly newsletter. Hope you had a great weekend. Hope you're able to relax. A new week, new month, December, holiday month. So we're going to have to adjust our trading accordingly. I just made a big speech to our regular subscribers about, different market conditions and how you have to adjust to different market conditions. And I'm going to repeat that speech. Basically, the market goes through three different stages. It goes through the trends, and then it will go into noise. It will go into consolidations. Now, it will go into trends different time periods. Sometimes the trend is on a monthly basis. Sometimes the trend is on a weekly basis. Sometimes the trend is on a daily basis. Sometimes on an hourly basis. And it all works in one big mess of sometimes the trend is on the daily chart, and then it moves over to the hourly chart, and then it moves over to the 30-minute chart, and then it explodes into the hourly chart again, and over to the daily chart, and then the daily becomes a weekly trend, and then the weekly trend becomes a monthly trend. As soon as it's over, it reduces again. Now, we get a lot of people that are asking, I just want to trade one type of trend. I want to trade trades that last 3 months. I want 20% per trade, and so on. Unfortunately, the market is not Burger King. You can't always have what you want. The market changes, and it changes time frames all the time. It's the same thing as someone saying, I want to drive 65 miles an hour. That's my favorite speed. I only want to drive 65 miles an hour. If you want to drive to 65, you need a helicopter to just come up and pick you up and put you on open roads, open highways that are available at 65 miles an hour. That means you have to skip over traffic, you have to skip over toll booth, you have to skip over side roads, city streets, or anything along those lines. You are only going to drive 65 miles an hour. Now, I don't know about you, I don't have one of those to carry me around, so I have to drive all market conditions, all different trends, all time frames, all the time. So if you have a comfort level of 65 miles an hour, you can take the wheel when the car gets to 65 miles an hour. If you only like long-term trends, you can also just pick up the trend when the market is setting up for a long-term trend. But sometimes the market goes into shorter-term trends, and that's when you have a choice. You can either sit out, you can say, you know what, I don't like this. This is too short term. I'm going to sit out. I'm going to wait for the market to set up. Or you can switch over to a short-term approach, and trade them accordingly. Let me show you that on the chart. This is a weekly chart of the Dow Jones Industrial Average, and you can see that we were in a very, very long-term uptrend. Got up to 14,000, and guess what? That trend is over. It's done. That's a weekly chart. I'm going to switch over a daily chart. And you can see that, we have lower tops, and we just went into a shorter term, or some people will call it long-term downtrend. Lower tops, came back, retracement. By the way, look at this. We retraced exactly 50% from the top. Take the number on the top, take the number on the bottom, 50%. It's exactly right there. That's about where we're at, which is normal profit taking for a trend. Retrace 50%. S&P 500, the same thing also. Top to bottom, 50%. NDX, NASDAQ 100, also top to bottom, 50%. So you can always mark 50%, the 50% number on your charts, and you'll see that's basically where retracements are going to go to. So we had a pretty nice longer-term trend down, and now we had a very, very short-term trend up. It doesn't look like a trend up on a daily chart. But when you move over to an hourly chart, you can see a very nice trend up. Is it over? I don't think so. It could go up for another trend up, for another wave up. Although we are meeting some resistance right here at the 50% retracement line, right at the 1490 on the S&P 500, 1488 on the S&P 500. But, normally trends up have more waves than this. So, on a long-term basis, looks like we're hitting some resistance, and we're going to have a pullback off resistance. On a short-term basis, looks like we're going to go up. If we go up, watch this line. Another Fibonacci level, 1505 on the S&P 500, which would work pretty well. So, long-term shorts worked out extremely well for us, and then short-term pop. Let me show you an example of two picks. CTB, Cooper Tires, 23.37 was our entry. Went all the way down to the $14 level. Beautiful. And then, whoops. And then on the long side, for the last couple of days, DSL. Downey Financial, by the way, financial stocks really came up because of anticipation of an interest rate cut, and from 37.66 up to 43. They're both good, valid trades. One of them is a long-term short, when the market goes into a long-term trend, and then you have a short-term bounce, and that's when you need to pick the shorter-term picks. We go back to the indexes real quick. There's the S&P 500. So, there's no long-term trend right now. Not on the daily chart anyway. I mean, there might be on the weekly. We might be developing into a top and then we'll go into a long-term downtrend. But we're not quite there yet. Looks like the Fed is coming to the rescue of the market. And the market is going to be anticipating that. That's from a fundamental standpoint. But that changes on a daily basis, basically, the amount of bad news that's coming on, the amount of remedies that people are willing to legislate out there. We're going to have a pretty busy week this week. We have crude inventory December 5th. We're going to have auto sales, which is going to be pretty important for us. We want to see how people are spending their money. We're going to have payrolls, initial claims, unemployment rate, hourly earnings, and so on. And earnings and payroll is the job market is extremely important for most economists right now. They think that's the true measurement of our economy, which I think is craziness, but that's just me. We're going to keep our short-term approach right now. We still are looking at trades on the short side on a long-term basis. They worked extremely well for us. For continuation, let me give you an example of a pick that I gave you guys, LCC, U.S. Airways. I gave you U.S. Airways at 25.22. It went down to 18. Some of these stocks that are still in a downtrend are going to continue going down. If the market gives them any kind of excuse, they'll continue going down because people are not really looking to invest in stocks that are going down. They're looking for strength, and these stocks don't have much strength right now. We're also looking at the long side for stocks that are looking to bounce. Stocks like our DSL and so on. Anyway, we're not really going to do a whole lot for the next couple of days. I'm waiting for the market to really show signs of either it wants to keep going down or it's going to keep going up. We have quite a few picks. This is our daily newsletter. We have quite a few picks on both sides, on the long side and on the short side. So our guys have ammunition for both sides. We're going into the holiday season right now. You have to adjust your trading. The way you adjust your trading for the holiday season is you adjust your stops. Make sure that as soon as you have 2%, 4%, 5% profit in the stock, you take some profits and you move your stop to a break even. That way your trades are free. That would work out extremely well for you. Anyway, I'm going to keep it short this week. There's going to be plenty of profit potential in the holiday season. When the market has low volume, sometimes there's some huge moves. So don't give up on it. Make sure that you keep an eye on the market and look for those trends in all time frames. Don't get stuck on one time frame only. Have a great week. I'll talk to you next weekend. Take care.